the net result of that, Sam, is that you're going to avoid many, many, many supplier records in your system. And I could quote you some costs of how much does it cost to set up a supplier record? How much does it cost to create a purchase order? How much does it cost to process an invoice? Every one of those has a dollar value. And if you're processing invoices and setting up purchase orders for a $100 transaction, even a $1,000 transaction, you're throwing money away. And you gotta find a better way.
Growing a business requires a holistic approach that extends beyond sales and marketing. This approach needs alignment among people, processes, and technologies. So if you're a business owner, operations, or finance leader looking to learn growth strategies from your peers and competitors, you're tuned into the right podcast. Welcome to the WBS Podcast, where scalable growth using business systems is our #1 priority. Now, here is your host, Sam Gupta.
Hey everyone, welcome back to another episode of the WBS Podcast. I'm Sam Gupta, your host and principal consultant at digital transformation consulting firm Elevate IQ. When you grow in transactions and have many low-dollar transactions, the cost of processing transactions could be higher than the expenses being paid. You might also face this when you may be purchasing cheaper consumable items from one-time vendors. Understanding the cost of processing is critical, as that allows you to introduce different strategies for such transactions. One such strategy is to introduce a P card for your low-dollar volume transactions, which enables companies to process transactions without creating vendor records or going through an invoice matching process. In today's episode, we have our guest, Scott Engelking, who describes why companies should be implementing a P card program for their low-dollar transactions to reduce processing costs. He also describes the end-to-end process of implementing a P card program and roles and responsibilities of each stakeholder involved. Finally, he shares several examples and best practices for effective P card implementation. Let me introduce Scott to you. Scott Engelking has been a procurement and finance executive who helped transform the finance function for a Fortune 100 pharmaceutical company and has been involved with multiple projects with payback in the range of $5 to $30 million a year. He has led multiple multi-billion dollar M&A deals that includes acquisitions and divestitures for SAP and global services scope. He frequently speaks at many shared services conferences such as SSON. With that, let's get to the conversation. Hey, Welcome to the show, Scott.
Hey, thanks, Sam. It's good to be here.
Of course, my pleasure. Just to kick things off, do you want to start with your personal story and current focus, Scott?
Sure, absolutely. Thanks, Sam. I was in a corporation for 30 years and played the role of somewhat of a change agent in a Fortune 100 company. I worked in a pharmaceutical company, and somehow or other, I ended up being involved in either leading or sponsoring or providing resources for all the big transformational projects in the corporation. So whether it was acquisitions or divestitures, system upgrades, systems implementations, anything connected to the ERP, launching global services, launching BPO, things like that. I had a big role in those things over a period, a long career, and decided I would take a retirement option early. I'm only in my early 50s, but I took an opportunity to kind of take a package and get paid to not work, and then start my own consulting company. And so for around 2.5 years, I've been helping companies with transformational projects, doing largely what I did in the corporation, helping them implement things connected to the ERP or implement entire ERP systems, doing transformational things, automation, acquisitions, divestitures, all sorts of things. So I made a great deal of connections throughout my corporate life. And so basically, a lot of people come and find me for various projects.
Okay, amazing. And obviously, there's going to be a lot of things that we need to discuss, especially your background in procurement, right? But before we do that, we have one of these standard questions here that we ask every single guest that actually comes on the show. And that is going to be your perspective on business growth. when you think of word growth, what does it mean to you, Scott?
For me, I'm an efficiency person, and I think that there's a lot of barriers in a corporation or in a company when things don't work together smoothly. So I think of integration and all parties, all partners working together, and when things work together seamlessly, that's an engine for growth. You can't get to growth without good efficiency. And obviously it takes great ideas for automation and things like that. But that to me that's at least where my specialty is in terms of business growth.
Amazing. And since you have spent so much time in the enterprise world, my primary target listener is going to be really from the SMB space. Obviously, in the enterprise world, you are going to have far more complex problems. There's going to be so much learning for our SMB listeners in understanding, how enterprises operate and what they can do to be slightly more efficient, right? So one
Correct.
of the cases, especially in the SMB space, I don't know if they have the understanding of the P2P system versus the ERP system. Obviously, in the enterprise scenario, you are going to have multiple systems just because your processes are going to be very complex. So let's say if I were to ask you, Scott, okay, from your experience, especially since you spent so much time in the procurement department, and these were really robust procurement department of the Fortune 500 pharma companies. They buy a lot of materials. Obviously, they need to be very financially savvy and financially controlled in terms of their procurement processes. Otherwise, they can really burn themselves. So obviously, the P2P processes are going to be very complex and robust. So from your experience, let's say if I were to ask you to describe what is the difference between a P2P system that is going to be procure to pay and what is the ERP system? So can you touch on the differences of these two systems? In what situations a P2P system is going to be relevant? In what situations maybe businesses can manage only with ERP?
Yeah, that's a great question. And everything starts with the ERP.
Okay.
Everything, all your vendor records around purchase to pay are going to reside in ERP, and that needs to be the system of record. All of your invoices need to be posted, or ultimately, let's say they need to finally reside in your ERP because it's going to drive your accounting results. Yeah. And so you think of the ERP as everything flows to the ERP. But P2P to me is a very unique, and I do consulting across a lot of processes. P2P is the one where there are numerous tools in the toolbox. Everything flows to the ERP, but there are many, many other various systems and sub-processes that help drive a robust process for efficiency. And like I said, with P2P, you normally see kind of a spider web of different systems and processes. And that is the norm. It's not a one-size-fit-all. And let me just give you some examples of that. So for a healthy P2P process, you may have multiple different ways to ultimately post an invoice. And sometimes that's going to be against a purchase order, and it's going to involve your sourcing group, and sometimes it's not. But with P2P, there can be many, many possible ways to get an invoice posted, or to, let's say, to hit an account in your ERP system. For example, you could have, a P card, which would be a transaction that's a credit card that would ultimately make a payment and allow you to make a purchase. You can have Excel-based billing from your suppliers. Now, that might reference a purchase order, but you could have an Excel document with many, many, many lines of accounting, and you could post one invoice with many, many lines of accounting to simplify the process. I could talk more about that later. But typically, you might have a scanning system, you may have an OCR system, and you may have multiple different, you may have a P2P platform that focuses on getting orders out and getting invoices in. All of these things connect together at the ERP. And like I said, with and many, many companies have a supplier portal, some with functionality and some without. But typically, that's where you're driving all your various transactions to your ERP. So, like I said, P2P tends to be very much of a spider web it's not a one-size-fits-all, and I actually advise against trying to come up with a one-size-fits-all. You need to look at your business and find out what the most efficient things for you are in terms of automating and improving and streamlining your source-to-pay process.
Okay, amazing. So let's talk about these things one at a time, right? And obviously, we need to understand more from the SMB perspective, and in some cases, obviously, as I mentioned in the enterprise scenario, sometimes the processes could be so complex of a department that the glue that you have, from the ERP perspective is probably not going to be as efficient, and then you need to find out the best of breed system. But let's say, we were to explore some of these scenarios, let's say P card.
Yeah.
Can you touch a little bit on P card, why they are relevant?
Yeah. And I'm a huge fan of purchasing card, and I kind of view it as the perfect P2P transaction. And one of the challenges, Sam, with purchase to pay is you have so many vendor records and you have so many purchase orders and so many invoices. The volumes in purchase to pay are typically astounding for a large corporation. Yep. What P card does is it's kind of a niche transaction for your lower dollar. And I could talk more in a bit about why it's for lower dollar. But a lot of times, if you look at a company's data, their invoice data, they're going to have a lot of low dollar transactions. The nice thing about P card is you don't need to set up a supplier record. You don't need to set up a purchase order. You don't need to process an invoice. And then ultimately in the US, you don't even need to do 1099 reporting because the credit card agency does that for you. And then at the end of it all, you can get a rebate back. So if you ask somebody why they're pulling their hair out with purchase to pay, a lot of times it's all the volume. What P card does is it allows you to utilize a credit card to make a purchase. And you can buy goods or services from a variety of suppliers. And again, that individual supplier never has a record as a supplier, a vendor record in your ERP. You don't have to issue them a purchase order. You don't have to process an invoice. And like I said, you can even get a rebate back at the end of it. So to me, it's the perfect transaction. Now, I've seen companies go too far with it where they try to make all their payments via a P card, and I don't really advise that. You should use a P card to avoid an order, to avoid an invoice, to avoid a supplier record. You shouldn't try to make all your supplier payments for your vendors that are already in SAP, in my opinion. And the couple things you need to watch out for is you got to think about what's in it for your supplier. And a small supplier will love to take a P card, especially if you explain the benefits to them of getting more business with your company. But a large transaction, they could lose a fee. So if I buy something for $100 on a P card, the supplier may only get 98. And that's fine on a low dollar transaction. But if you get high, like let's say over $5,000 or $10,000, a lot of times the suppliers will object. I've never had small suppliers object to small purchases on a P card because it makes their life a lot easier too. So the only downside I can think of with P card is the potential for fraud. Meaning that your employee could buy something for him or herself as opposed to for your corporation, and it's a challenge to figure out exactly what was purchased sometimes. But there are really good systems from the credit card providers, the banks or the American Express type of scenario that can, all of the big banks, MasterCard, Visa, have really good systems through the individual issuing bank that you can utilize to prevent fraud and keep your process very controlled. But a lot of times I start with that. And when I look at a company, the first thing I do is I look at their invoice volumes and I quickly identify opportunities to improve. And one of the first things I ask them is, do you have a P card program? And I've helped many companies launch P card programs. And in terms of the global nature of this, and this one's kind of exciting, that it's really been big in the U.S. for 10 or 20 years, but it's catching on big time outside the United States. And more and more companies are launching global types of programs for P card.
Okay, amazing. So I am interested in knowing where the term is coming from, right? Because see, if I look at purely from the conceptual perspective, I have seen this scenario happening in case of some of the very small businesses, even if they are using, let's say, QuickBooks, right? Because, the scenario that you are talking about is, let's say, if you have your regular suppliers with whom you are, let's say, buying the regular supplies, then obviously they need to be set up as a vendor. But let's say if your employees are going to Pizza Hut or maybe some of the restaurants or meal kind of expenses right now, you are not going to be setting up these as the individual vendor. What you are going to do is you are probably going to create some sort of generalized vendor, and you are going to be capturing all of these payments against those vendors just because you want to avoid the overhead that is going to cause by creating these vendors, and your vendor data is going to be probably a nightmare, especially if you're running a very large corporation. So I understand the right. So even in case of ERP world, it's not officially called P card, but they are sort of using the P card.
Yeah. Remember, all of this still flows through your ERP, and some of your questions were a little more around travel expense reporting, which is very, that's using credit card as well. I'm talking about also moving into buying goods and services with the credit card, just like your example at Pizza Hut. And you clearly would never set up Pizza Hut as a vendor in your system and ask them to send you an invoice. It just wouldn't make any sense. And if you look at your low dollar purchases, and there are some things that are inappropriate on a P card. If you're making a pharmaceutical, and I come from a pharmaceutical background, we wouldn't want to buy our active ingredients, via a P card because you don't have the right documentation. But what about your safety shoes? What about your safety glasses? What about your gowns? What about all your miscellaneous items? There's plant maintenance going on. A lot of times your plant maintenance person needs to run to the hardware store or to Walmart or wherever, or buy something online. They can always use a credit card. And so the net result of that, Sam, is that you're going to avoid many, many, many supplier records in your system. And what, I could quote you some costs of how much does it cost to set up a supplier record? How much does it cost to create a purchase order? How much does it cost to process an invoice? Every one of those has a dollar value. And if you're processing invoices and setting up purchase orders for a $100 transaction, even a $1,000 transaction, you're throwing money away. And you gotta find a better way. Now, I'm not saying I got a lot of other tools in the P2P toolbox, but I'm just saying that P2P card is one that every corporation should consider, every company should consider.
So I'm still interested in knowing where the concept is coming from. So is it a feature set provided by some of these P2P systems that you have seen?
Yeah, that's a good question. This is typically separate from your ERP system, although it's going to flow there, and I can tell you how it gets to flow there. And it's really separate from your common P2P platforms. It's normally a separate type of transaction, and what you're going to do is you're going to just look to whoever your bank is. And you mentioned travel. Whoever your travel card provider is, ask them, hey, do you have a P card program? You're going to get one invoice a month from your bank or from your provider. And that invoice is going to have all the detail from all that line item. Now, in the case of T&E, all of that's flowing through a T&E system. In the case of P card, typically it's flowing through your bank or your P card provider's portal system. And all of that, though, you're going to have one invoice per month per country for all the transactions that occurred. And like I said, it's kind of a dream transaction from a P2P perspective.
Yeah, so basically what you're saying is, this is the standard transaction supported by these financial entities. So let's say if I'm the small manufacturer and if I want to learn more about P-card program, then I should be dialing either the merchant processor or the bank and asking them, okay, do you have a P-card program that I can utilize for my transactions? Okay, got it.
Yeah, exactly. You talk to them, and then they're going to tell you what they offer. And then you're going to look at your ERP system. Typically, and if you want to connect it to the ERP, what's going to happen is that provider is going to send you one invoice per month that you've already checked and rechecked and confirmed that everything's appropriate, all the accounting's right, and they give you a file at the end of the month and you upload it automatically. So it might be thousands and thousands a line, and it's truly just one invoice being processed. So it's typically, this one is a little different. It flows through your ERP, and it may even flow through your P2P system if you have one. We could talk about some of those, but normally it's just a single transaction, a single invoice per country. And normally, if you launch P-card around the world, you'll have one invoice in every country for everything you can possibly put on a P-card.
Okay, interesting perspective. So I am going to have one question, and maybe I'm missing something here, right? So the way I am thinking of this is, it's almost like a credit card, right? So basically, I am actually asking, okay, you know what? Rather than doing these individual transactions, I'm going to dedicate a credit card, and all of your transactions are going to be processed through that. So what is the difference between a credit card and a P card? Can you touch on that?
Yeah, that's a great question, Sam. And 20 years ago, they were all the same. So the P card was an actual credit card, and still many companies actually put credit cards in the hands of their employees. Now, with the advent of e-commerce, some of the bank providers can give you a virtual card where you have a credit card number. You don't even have the plastic, and you just use the credit card number. Or you can lodge a card with a particular supplier and say, hey, I want you, when anybody from my company comes here and buys anything, I want you to, in a controlled way, put it on a credit card that I give you the number for it, and then you use it like that, and then that flows everything back to you. But to answer your question, Sam, it could be a physical credit card, and oftentimes it is, or it could be what we call a virtual card or a lodged card, which is basically just a credit card number that's used for a specific purpose.
Okay, so other than this being a virtual credit card, I mean, obviously, it being virtual has a lot of different advantages, right? I can see that you don't necessarily need to hand over this card to your vendor. They can simply get the number and they can always process that, right? So obviously it's much easier, and I have a lot more control. I mean, I can launch as many cards as I want. I don't have to call the bank. I don't have to call my merchant processor each time. Let's say if I have a new employee or I have a new category of transactions that I need to process. So other than this being a virtual card and having more control, do you have any other benefits using the P card?
I think we covered them really. I mean, I think that, you can have a piece of plastic or you can have a virtual card, but I think this is it's going to get bigger and bigger, Sam. So like I said, it's going to grow around the world, and you're going to see more and more people realize that this is the most efficient or one of the most efficient vehicles. I'm looking forward to talking about some of the others, but this one is one I'm particularly excited about. Companies that I've talked to that don't have such a program, a lot of times they'll launch one and have great success.
Okay, so obviously one of the problems processing a transaction on the credit card, and I think you touched briefly on that sometimes it is going to be super expensive, and that's the reason why bigger transactions, the companies are going to be really afraid of processing them through a credit card. So in terms of rates, do rates vary with respect to a P card and a credit card? Or from the bank's perspective, the rate is going to be same for both of them?
They do. It's a little bit behind the curtain of the provider, and different providers have different rates, and they're not usually completely transparent with you because that's a negotiated rate between them and the merchant. Remember, whoever is accepting the credit card has a merchant bank, and you have a bank. The two big networks, Visa and MasterCard, they each have their own. But normally people think of it as in the 2%-ish range, and sometimes a little higher, sometimes a little lower. And a lot of times when you get up over $10,000, they will cap the rate in order to, take not such a big amount, because a 2% on a $10,000 can be a lot. So that varies, Sam, provider to provider. And that's not something that's typically transparent to the corporation. But like I mentioned, rebates, it is very, very common to get over, 2% or more back on your spend. So that you're going to get a big portion of that 2%, 3%, whatever it is that's being charged if you negotiate your contract right.
Okay, so I want to make sure that I am understanding these players involved, right? So let's say if Visa or MasterCard, most likely they are the ones who are actually going to be issuing the P card, and your bank is probably going to be handing it over to you under their name or brand or however you want to define that, right? I don't necessarily understand all the entities involved in
the way it works is that you have a bank, and then the bank is going to offer you a credit card program, and it's either going to be a Visa program or a MasterCard program. And then, of course, there's American Express that is in more of a direct issuer. They're not a bank. They're more of a provider. And I'm not advocating any one of those platforms over the other. I'm just kind of telling you that's kind of the market is those big players. And then if you're dealing with a bank, then they're going to offer you either a Visa or a MasterCard program.
Right, but I mean, let's say if I'm utilizing the P card for my company as a manufacturer, if I'm working with a supplier and I'm telling my supplier, hey, you know what? Are you going to be okay in accepting the P card? And if let's say, merchant says okay, they don't necessarily have to deal with the bank. It's really their agreement that they are accepting the P card, and they are most likely going to take that 2% hit because they have to take the hit, not me as the manufacturer, right?
Yeah, there's a lot of different ways that they can accept a card. And what I frequently tell people is either they can go to a bank and they can negotiate with the bank and they can get the equipment that they need to accept a card, or you can use something like, you've seen the little squares and the things like that are little options that you can put on your phone. Let's just say it this way. There are a lot of options globally for a small provider to take a credit card. And typically there's a percentage in there. But there's a lot of small vendors who would be thrilled to go out and look into the options for them to accept a credit card for payment.
Yeah. So amazing. So now let's talk about some of these stories of P-Card. And as you mentioned, I mean, when you create a process or a system, it's very easy to exploit that unless you have some sort of framework defined. And that is easier said than done, right? To define a framework, in which case you should be accepting a P-Card, in which case you should be creating a vendor and processing as the invoice. So what are some of the stories that you might be able to share? We have seen like super terrible implementation of P-Card that you would never do second time in your life, or one of the awesome P-Card implementation. Can you talk about each of those scenarios?
Yeah, let me think about the rough stories. I mean, I can tell you about some of the bad things that can happen with employees using P-cards and that type of thing, more the fraud angle. And I guess I'll start there, So you have to really watch the shop. And, I've had situations in my career where I've seen people do things inappropriately on a P-card where they, basically, we didn't talk about the liability scenario, but typically P-card is a corporate liability scenario. So somebody gives me a card or a number, and I can do anything with that card, and that's why we need to have people save receipts and get management approval for all their transactions. So I would say every time I've seen something really bad happen with a P card, and it's somebody, paying somebody's college tuition on a card, or
really? Oh, wow.
Buying weird things, online gambling or whatever, you can, but what you can do is you can work with your provider to block certain categories. And I strongly recommend that. I would never open up a P-card program and say, hey, our employees can buy anything. You need to have a very specific policy about what is and what isn't allowable on a P-card. And it's no personal use is the one that's the no-brainer. But you need to be very specific, and you have really, really good policies. And then you need to make sure that everything's being approved. So I've seen, and hey, there's judgment calls. Sometimes people think they're entitled to buy things. But the question is it a legitimate company expense or not? So you need a very, very good policy that's very clear, that takes all of that guesswork out of it. And then you need to make sure that you are authorizing the appropriate authorities to spend money. This is an authority to spend money for your company, and that you have somebody that's watching, that's willing to validate, like a supervisor that's willing to look in the system. Because when I've seen things go wrong, Sam, it's when nobody was paying attention. We put a card in somebody's hands who probably shouldn't have, and then their supervisor was not watching and not checking anything, not even going into a very simple portal and looking at it. So and some of my examples are years in the past where there weren't such good systems, but now there's really no good excuse for it. So I would say that the things I've seen to go wrong, you almost can't go wrong in terms of the type of purchases, except for things that are part of your manufacturing process or part of your research process if they're validated or something like that. But there really isn't much of a wrong purchase. But like I said, it's been the fraud or the misuse. And I can count them on one hand, how many bad things I've seen over a 30-year career. So it doesn't happen very often. And when it does, there's usually a very clear story about what happened. So that's the bad side of it. Okay, so the positive examples would be like, creativity. I mentioned there are, you can do a card with a particular supplier. If you buy safety glasses, safety shoes, and a lot of my examples are kind of pharma oriented. You can give a card to a particular provider, and then you create a really controlled process around that. And you have them have a card or a version. They may not even know the card number. In some instances, you can just say, come up with a way to charge it. And then they send it through your network back to you. And the nice thing about that is it's a super controlled process. You can communicate it very cleanly and easy. Hey, if you're ever going to buy safety glasses, here's where you go. You go to any one of these locations. You go in and you give them your information. They already have a way to get this thing paid. And they have a set of questions to ask you, and then everything comes back and then posts in your ERP automatically in a way that has been pre-thought through. So those types of examples of the virtual scenarios. This is getting a little bit into the T&E world because these things kind of blur together a little bit sometimes. But applicant expenses. If I'm in my corporation, we had a lot of times where applicants were being given cash advances because they were in for an interview or there was a process. And we just basically came up with a program to give them a predefined card, a virtual card, or a preloaded card, and handed them that card when they arrived and say, hey, you've got $400 to spend no matter what. And we don't really care what you spend it on, frankly. It's yours, because we know you have certain expenses. And that's a really nice way to use a credit card in a way that, frees everybody up from a lot of transactional mess. So those are some of the creative things. The lodged cards, and I've seen many different categories of spend where a lodged card makes a lot of sense.
Okay, so let's talk about some of the policies and procedures that you have defined to ensure that this goes well. And I know that you touched on the categories, and I don't know how easy it is going to be to define these categories because I really don't know if the categories, the way you are going to understand your category versus each of the vendors, they might have different interpretation of each of those categories. So I don't know what are going to be the best practices in aligning on them. Typically, do you go by the categories that they are going to provide to you, and then you simply check box and tell them that, okay, these look okay, and you should be accepting them. The other ones, you should be rejecting them. And do you have any sort of cap on the amount as well, the amount that you can spend? So can you talk about some of the best practices that you would recommend, let's say, if you were coming on an engagement where you need to start the P-Card program, what are some of the things that you will take care of while starting the program?
Yeah, very good question, Sam. So, like I said, a clean policy and a well-defined policy is critical. Normally, as a best practice, I say match your upper limit for your P-Card with your capital limit, because P-Card is good for expensed items, but it's not very good for capital items. If you're familiar with your ERP system, it's very different accounting for capital versus expense. So one of the things we normally, what we'll do is we'll come up with a policy and we'll have a two-sided page. And on the left side, we'll say these are appropriate P-Card expenses. On the other side of the page, we'll say these are inappropriate P-Card expenses. You may say, and really you want to encourage and say, hey, we do not want you to buy office supplies without using a P-Card. It is an appropriate use. And I've seen some companies say that. We want all office supplies, all lab supplies, all maintenance items, and they list a lot of items. Every time we get pest control done, it needs to be on a P-Card. So there's a really long list, and they're not only appropriate, but we say, hey, this is the only way to buy this thing at this company. Then on the right side of the page, you would have inappropriate use. So we would say capital items. Do not purchase capital items on a P-Card. Personal items, that's typically the first one. If it's for your house and it's your personal item, it is not appropriate. So inappropriate company expenses. So you're not going to list some of the crazy things like liquor stores and offshore gambling or something like that, because that's obvious. But those are the things where they're obviously excluded. So and there's some companies that have said it's okay to buy flowers or miscellaneous food for the office or something like that. I've seen different companies go different ways. In a lot of cases, though, company will say, we don't want everybody buying flowers, like if for sympathy or something like that. But we're going to have one person at the company whose job it is to buy flowers if there's a situation where somebody would be sent flowers. But it's only that person who can use the P-Card for that. So your run-of-the-mill everyday user can't. So you can be very specific and surgical in your policy. And you asked best practices, Sam. I would say having a really good specific policy and making the P-Card user sign the policy before they use a P-Card. I mean, sign a document that says they took the training and they understand the policy. And another good practice is to do random audits and double check. Did the person attach all their receipts in the system? And if they didn't, and they consistently don't, then you suspend their P-Card usage. So I think it's a best practice to say that P-Card usage is a privilege. It's not a right. And if you're not following the policy or you're not getting things approved appropriately, then you no longer have the privilege to have a P-Card, and it could be suspended. And people get upset with that because they love their P-Cards. The thing is that I've never seen anything with P2P where people are as excited about having a P-Card, and mostly for all the right reasons. It's because they don't have to mess with all this hassle of the typical P2P transaction. They're thrilled. But sometimes if they go too far and don't get the right approvals, then you have to say, look, we're going to suspend your card for a month. And then they'll really appreciate it when you give it back to them. So that's a best practice. I think utilizing an online tool is a best practice. Not issuing, using what's called reallocation. Remember, all this is going to point to the ERP system. And it's all about accounting. And so you might have one card that has a default cost center, cost element, or whatever, general ledger, or whatever you call your accounting. And then the person can reallocate and buy something to a different, somebody else's department or cost center and a different general ledger. So they use what's called reallocation through the P-card tool to get it to the right location. So that's clearly a best practice, to utilize a system like that.
Okay, have you seen any other crazy scenarios here? Because obviously the P2B is going to be slightly newer for some of our listeners, right? So have you seen any crazy scenarios? Because obviously this is going to be slightly transactionally different. And let's say if this is not really supported by their current system and they are simply using their current ERP system or whatever processes that they have, they are utilizing the P card. Do they need to be aware of anything from the transaction processing perspective? Just because in this particular case, you are not going to have the invoice, the vendor, you are not going to have, record of the transaction, right? But still, have you seen any crazy scenarios because of P card? Some implications?
No, other than the fraud, not really. But one thing to mention is that you do have limited data. And that's a great point, Sam, is that when you make purchases on a P card, you're limited in the data that you get back. And the providers, there's been a lot of discussion about possibly providing more detail about what was purchased. So you typically do not get the line item detail, which is the actual item purchased. But you do get the date, and you get the amount, and you get the merchant. That's who the provider was. And, so you get all of that information back. And what typically posts in your ERP is just credit card transaction, the date, the amount, and a lot of times people don't take the time to get the merchant all the way into the ERP system. That was going to reside in the credit card system. But you've got all that data, so you can mine the data and see where all these purchases were made. But that's the other downside, I would say. Or let me put it this way: I've heard people question it and categorize it as a downside. But I don't feel like it is. Who cares what exactly was purchased for a very small dollar? If something was purchased for $20, do you seriously care what it was? And I've had to talk a lot of financial people and accountants out of needing that information and say, you know what, you need to focus on a higher priority. You do not need to know exactly what was purchased. And so I think people get tied around that and view that as a negative. But I think, you know what, it frees you up. You don't need to know what it was. You don't care what it was. As long as it's within policy and as long as you do periodic audits, you can get yourself very, very comfortable on that your program's under control.
So how are these vendors typically treating this transaction from their side? And I don't know if you're going to have visibility into that. So let's say if your employee is going to call that, I'm looking for, let's say, flowers, right? And I don't know whether the vendor is going to record the name, the person who called, because there could be a situation that somebody else is calling. I mean, some random person, not even from your company, and they might say that, you know what, I'm actually calling from this specific company. Do they have any way to verify if this is a real person? Do they keep their identity? So how does the process look from the vendor perspective?
Yeah, that's a very good question. So, and actually, it's a good example to say, this is all about procurement and it's all about sourcing. And you can negotiate with P-card. So let's say you're a company in a town and there's 5 flower shops, and you decide, you know what, we're going to buy all of our flowers from flower shop A, and we're going to go and negotiate a good deal with them, and we're going to get better preferred pricing. So you may want to go. So I'm not suggesting that you do this. I'm just saying you might do this. And you might go to that flower shop and get preferred rates and talk to all your employees and whoever's buying flowers. And to tell them, go to this flower shop because we got a preferred rate. Then the flower shop needs to be a partner to you, and you need to create a controlled process. So what I typically recommend is that we have the employee show his or her employee ID when they make the purchase. and the flower shop knows, what the employee ID looks like, or they have access to a system that can validate the person's employee. If it's not done in person, it's over the phone, they can validate that employee name and number. And very quickly, if something is ever purchased inappropriately, if word got out, and I don't know, I've never seen something like that, honestly, though, where inappropriate purchases were made by something that wasn't authorized, because it's always typically controlled. But they're going to validate that and then they may ask the person a standard question. How do you want this to be charged in terms of accounting? You may or may not give them the ability to charge it to multiple different cost centers. It drives a little complexity if you do that, but believe me, there are ways to do it. And actually, Sam, I thought of one more cool option to use P-card, and it's your one-time vendors. I've seen AP teams keep a P-card in their group. And when they get an invoice in, let's say it's a non-purchase order invoice, and it looks like a one-time thing, it's a small dollar amount, then they have the invoice in their hand. They pick up the phone and call that supplier and say, hey, would you take a P-card payment? And the vendor would oftentimes say, absolutely, we would. And remember, let's go back to where we started. What are all the benefits of that? You don't have to set up a vendor in your system. It's a one-time vendor. Who wants a vendor record for a one-time vendor record? The answer is nobody. Who wants a purchase order? And a lot of times people will get these invoices in, then they'll set up a purchase order after they have the invoice in hand because of some policy. And then this invoice, you did have an invoice, but you're gonna pay that invoice with a P card, and you're gonna throw it away or file it in some way. You're not gonna process it as an invoice in your ERP system. So to me, that's a really creative way to put the process into your P2P hands and have them leverage a credit card for something that's going to avoid a whole lot of work for everybody.
Okay, Scott, that's it for today. Do you have any last-minute closing thoughts by any chance?
The only thing I would say, it was really fun to focus on P-card with you, Sam. I really appreciate it. And appreciate your time and your great job hosting here. I would say that the exciting thing about P-card is that it's going to grow internationally. If your listeners out there are thinking about this, it's coming to a country near you. I've seen a lot of growth in P-card really recently, and I think it's going to explode internationally over the next 10 years because it's e-commerce at its best, and it can be a controlled good process. So I think whereas in the United States in the last 20 years this has been commonplace, it's growing rapidly elsewhere, and that's the most exciting thing to come.
Okay, amazing. And my personal takeaway from this conversation is going to be when we look at the transaction, we don't necessarily look at the complete cost of the transaction. And some of the ways to reduce that cost and be efficient is going to be by utilizing the P-card, because that actually reduces the admin effort significantly. On that note, Scott, I actually want to thank you for your time. This has been a fascinating and insightful conversation.
Well, thank you very much, Sam. It's been fun for me too.
I cannot thank our guests enough for coming on the show, for sharing their knowledge and journey. I always pick up learnings from our guests, and hopefully you learned something new today. If you want to learn more about Scott, head over to gvintegration.com. It's gvintegration.com. Links and more information will also be available in the show notes. If anything in this podcast resonated with you and your business, you might want to check other related episodes, including the interview with Susan Walsh, who discusses how to normalize your product, customer, and vendor data to avoid planning and forecasting issues with your inventory. Also, the interview with Francois Jaffray from Noviland, who discusses what manufacturers need to know about working with international suppliers. Also, don't forget to subscribe and spread the word among folks with similar backgrounds. If you have any questions or comments about the show, please review and rate us on your favorite podcasting platform or DM me on any social channels. I'll try my best to respond personally and make sure you get help. Thank you, and I hope to catch you on the next episode of the WBS Podcast.
Thank you for listening to another episode of the WBS Podcast. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. For more information on growth strategies for SMBs using ERP and digital transformation, check out our community at WBS.rocks. We'll see you next time.